Welcome to TradeTheMBI.com. This is John. This report is for the 6th of June. And well, there we see it, the cross of the green above the cyan and also the steel above the cyan all at the same time. We already had red leading the way from a daily standpoint. And just like we talked about, inflows from capital funds on the 5th tend to get activated. And sure enough, that propelled market to new highs. Bit closer to overbought, which is interesting because they throw their wad at it and they usually throw it quite heavy. And in fact, then the question is, do people start taking some gains off of it? Not based on what we're seeing from this chart. Intraday it was really nice, and it's interesting because while the market continues to make highs, you see the ECB going into negative rates because there's just all this tied up capital. And this is where the capital has to go because this is the only thing that's creating a return at this particular point, which is what they wanted to force. But like the ECB is trying to get people to then force lending because it doesn't do you any good to save. But unfortunately, you can't necessarily force behaviors. It's something that economists sometimes have a hard time grappling with, that the human psyche really impacts. Now, it's interesting because in the YM, put in the red dot, at the same time, orange dot, so conflicting of up and down, but so far this is an up read. With the crossing, everything looks good for that. Interesting because the YM is not as overbought as we see for the S&P. But in that same vein of trying to force people to change their approach to where they put their capital, you've got a problem because governments get in the way of that, and that is where tax policy and that, or like in the U.S., I mean, we had many years of stagnation simply due to Obamacare. Whether you agree with it or not is irrelevant to what it did as far as a paralyzing effect on business, because businesses were unwilling to utilize any capital because there was uncertainty. And this is what you do. You freeze an uncertainty. Now with oil, in this particular case, making a little bit of a comeback with the market rise, but it's still a bit more of a bearish read on that, which is interesting because you're going to need to see oil maintain its strength in order to suggest that there's going to be continued growth. I mean, while you've got, like, even the situation of bonds not over with its decline, and we saw it make new lows, just now getting some support with that strong pivot for the steel, but no turnaround yet in the green, and certainly nothing from the red now. In fact, we're about to see probably dark red readings beginning here, and that could mean a longer term decline for treasury yield there. Oh, and this, we have the euro. Look at this from the 78-minute chart. Says ugly. It got much more ugly, rebounded quite strongly on that. That's not going to last. We can see here from the breakout of that spider that developed on it, and then the skyrocketing there. If we look at the daily, we can see also that that's not going to be supported as well. So still look for the good opportunity to short the euro in this particular case, looking for a bit more of a retracement back to it. And it's an interesting one because while you kind of force banks to do something, if you don't have that entrepreneurial spirit where people think that they can thrive in a business, you can throw all the money you want at them, but they're not going to borrow it because they just don't think that the climate exists to support what they're doing, and that is a psychology, and that requires a lot more work to change psychology in people's minds. Gold, nice little cross with the red and then green above with the cyan dip below zero. All those are nice. Actually, if you had the steel above plus 13, that would be even stronger because, as we talked about this being a cylindrical indicator here, we would then be moving literally up from the bottom underneath and kind of creating the same de facto buy cross. So this would have to continue on that way. Unfortunately, with that deep red, you have to be cautious. We don't have any new high pivots, and you're so far from the negative 13, you have to be real careful with that one. I would still suggest that we're going to see it stagnate for a bit longer. We had some improvement with materials there with ex-US steel moving up. CLF also tiny bit, but again, you're seeing that these big channels with the rectangles not changing, and it's just an indication that there's the potential for continued weakness. Did have a first crossover on there. I think we saw the same thing on WLT. AIG continue its move. Beautiful. Just nice, clean, easy to read. We'll plop up WLT right there because I think it had a little T spike. But again, so whereas CLF met, green moved above. Every time it meets with WLT, it goes the opposite direction. So I would look for that to begin a retrace back down. We'll take a look at some of the let's go back to our daily ES, and you can see that we completed that GAM trade right off there. No surprise. We were looking for 129, so this one had finally completed. This one at 1927. Interestingly enough, new Starhawk bought at that buy signal. So interestingly enough, get another buy setup with that configuration. Let's look at our 50K because that's just going to be extraordinary. So actually I have to shrink it now. It's become so many days. There we go. Now we got both buys in, and we can look at the summary report. Dun, dun, dun. Still hasn't traded out, so we now know we're going to be way over this 400. It's going to leap to huge numbers. This current trade, as it sits right now, yeah, that's going to take it well into the 420 range. We're going to have it'll be interesting because the first year, obviously, with the huge gains, you get this great percentage, and then after that, it's a little bit harder to get the return. But needless to say, it's still going to outpace what the market and most individual stocks are doing from an intraday standpoint. It was beautiful. We came across there. It put in the initial buy. Even if you waited a little bit, you could have caught the crossover of the green for the confirmation. And I mean, even that would have put you in there around the 23, 24 range. And it just proceeded to move on from there. Just doesn't get much cleaner than that. It was easy to see once you broke out to the zone as well. So all in all, no complaints with that. You can see that the cyan steel dipped below the red white even along all this. So even when we came to a peak here and it started to move down, you still didn't even get the beginnings of a crossover until right over here, which is just marginal. I mean, you're just expecting a slight retrace back to the setup that it already took out. So all in all, that was just a beautiful day. It was very easy on even all the alert charts too. Most of them were just one-sided clean. Apple was one of the few that wasn't, but it already had its nice peg run off the little decline there. Still looking decent with that setup over there. Amazon, we had a huge intraday buy. It came in like the first or second bar of it and exploded to the upside. It had already had the crossover began, and boom, it just took off from there. And this is what happens when you get that latent setup, and some people get caught to the wrong side of it, and it's like, what happened? And boom, it just goes. The 15-minute on there. If you go and look at the alert charts on the HTML, it's just gorgeous looking setup there. Double pivots on the Baidu there. Lifted that up, even though it's still, it was a slightly bearish configuration. It's steel hanging down lower in the safety. Helps support things, and this is where also I talked about FAS. As long as financials keep moving in the right direction, I had no issues longing this market at all. And sure enough, it proved to be exactly correct with that. And nice blowout. One that we still considered weak and has been weak was Facebook, and yet it popped out to new highs but could not hold any of that, and that was particularly with this look has not been attractive at all. So kind of an ugly chart in the broader sense of a huge bull market, and may see some more weakness from it. I still continue to play it a little intraday because we haven't had that blow up, because the extreme here has been holding up very nicely. We haven't seen any consecutive decline in days with the extreme histogram moving lower, that there's a increase in sellers taking place. So it's held up quite nicely on that. But like we talked about with the orange magenta candle, that can happen for a few days. You got to have enough time in there to be able to handle those gyrations. Google came out nicely off of the early part of the steel move, caused green pivot as well as the improvement in the extreme histogram to open the day. So started off okay. It wasn't a great move, but it was okay. Still likely to experience some weakness in any market pullback. Netflix had been just as strong. I mean, there's nothing else you can say other than just look at the color. Boom, it was there, easy to see. Cyan has stayed below the whole time. No objection. PCLN was also one that we had talked about being very weak and the potential for it to really retrace. And sure enough, look at that. So chart becomes very interesting to watch when you look at these and you can see it develop. There are times where you can get a change. I mean, obviously, you had some bullishness holding it up with the steel rising, green continuing to fall, red continuing to fall, and now we've got that beautiful split where you have cyan rising, green falling. Should expect to see that retrace a little further. Tesla's been just kind of flat overall, and yeah, and that weakness has just kind of been abated. Not getting a whole lot. You're not getting any real, running from it. It's just sort of that flat kind of malaise that develops. And Twitter, coming off of its bottom, finally broke out to a higher peak up here, and that was the earliest sign that things were about to improve. Now you've got the green over the cyan. You broke into a new zone there. So some positives with that little bit of a turnaround after retesting. Didn't get quite all the way down to the lows, but retraced quite a bit of it. There was that nice rising red and white that I love to look for. Always a good clue. And then intraday, always fun to watch it because you get gyrations both directions. I mean, it'll come all the way up, fade real fast. Makes for fun and easy trades. Let us look at the numbers. The Dow right here, got some new buys pop in there. We'll do some of the high flyers we just went through. And to the S&P, a lot of green. Very happy on the S&P. Everybody's having a good time. Tons and tons, giving them all those extra millions to buy more condos in New York. Keeping it large. Summer's about to begin. Final day of school here in Italy for all of wonderful school children. Lots of excitement happening with that. There you have the general view of the market and what is going on with it. It is just party time for bulls. No objection to it whatsoever. We're just going to continue to ride the wave. And we'll look and see when we start to get more overbought conditions like this. And if we see any fading, we'll know when it's going to happen. But the reality is, even here, you're going to make a higher pivot, even if the red comes down. And then any new green pivot below and back above is going to become a new buy signal. We're already seeing it from the daily setup that we've already got a new buy. And that's going to be looking for the ATR right there. You can see it is 12.3 down at the bottom right here. So you can do the math. 1.23 times that ATR number will give you the total projection expectation for the Starhawk moving forward. Gotta go with it. As always, though, continue to look for me on private Twitter feed, StockTwits. Trade well.